We talked a little bit about the benefits, but the benefits would be cash back. You're getting some type of rebate and incentive. In our world, it's all cash. You're more secure because the virtual card in an accounts payable world, again, to separate the two, we're not talking about miscellaneous expenses and travel and expenses, stuff like that. We're talking about stuff that's running through true accounts payable. You have a secure one-time use, typically exact amount that's being facilitated to the vendor and supplier.
Welcome to the Financial Advantage with GSS, the video series designed for CFOs and financial leaders in the restaurant industry who are committed to optimizing operations, enhancing financial strategies, and driving sustainable growth. Each episode explores the complexities of restaurant finance through expert insights, real-world success stories, and in-depth conversations with industry leaders. From managing compliance to scaling operations, we provide actionable strategies to help your business stay ahead in a competitive market. Let's get started.
Well, hello and welcome to another episode of the Financial Advantage with GSS. I'm Nick Stauff, and this is another episode aimed at bringing you the stories that matter in the restaurant, finance, and accounting market. So today we're going to learn a little bit more about virtual payment cards. What are they, how they can be used, and what are the benefits in the restaurant and hospitality industry? And today I brought on a very special guest who has inside knowledge into virtual payment cards. His name is Andrew Grunder. He's the Director of Strategic Sales at Corpay. And without further ado, Andrew, welcome to the podcast. How are you?
All right, Nick. Yeah, thanks for having me on, man. I'm great. This is an exciting topic because it's one of the few areas I think that you can say it's free money to a restaurant and hospitality business owner. So appreciate you having me on.
Oh, you just rang the bells of our listeners of free money. So
that's right.
We absolutely know the tight margins in the restaurant hospitality industry, and this might bring some insight to our clients, prospects, or anybody in the world, maybe to help out with some margins, maybe to help out with some free money.
Perfect.
Cool. Why don't you give us a little bit of background on yourself? Like what does your career look like? You know, what are you doing now? All that good stuff.
Well, just like any other finance professional, I was born and raised on a farm in Northeast Ohio, just like everybody else that wears a white collar, right? So yeah, my childhood upbringing was one that there's this meme that runs around out there that it's a farmer walking with his son, which is my dad, and it says, "Son, Dad, when do we get a day off?" And he said, "Son, we're farmers. There are no day offs." And so that's kind of my childhood upbringing, and something I kind of hang my hat on the hat rack about, is that growing up there were no day offs. So fast forward, I won't bore you with the beginning of my career, but essentially I landed in a Fortune 50 corporate card operation early in my career and learned basically from the road, from the ground, what corporate card is, what corporate expenses are, and how to generate return or generate revenue by leveraging an alternative payment tool. And what most people don't realize, and this was always a funny thing for me to say back in the day, Nick, was the first check, which is still a lot of payments run through a paper check in today's world, particularly when you think about hospitality and the COGS that they're paying for, cost of goods that they're paying for. The first check was written in 1659 in England, and we still freaking write checks today, Nick, for our businesses. I have a side hustle business as well. I know you were involved in a great many business ventures, and so that kind of kickstarted my career and opened my eyes into what this actually is when you talk about corporate payments and corporate expenses and how do you pay for and account for those. It just blows my mind, Nick, to hear that the first check, which is still the majority of payments going out the door today for businesses, was done in 1659. So yeah, so that's how I kind of got my foray into what I'm doing today. There was a brief stint there, which is where you and I met, right, in the payroll and HR world, where I joined a fast-growing payroll and HR company where I live here in Columbus, Ohio. And we had exceptional growth, and we were mainly geared toward restaurant and hospitality businesses, and primarily in the franchise space, which I know you guys work a lot in at GSS. So of course that's where we met. So we did that for two and a half years, and we had grown so fast that we basically got to the point where we were like, look, the the exit here is pretty sexy. It's pretty fancy. So we took the exit, and at that same time, my former boss at my previous stop that I did for about a decade had called me and said, hey, remember all the things we wanted to do in the corporate payments world, but we really only could hand a piece of plastic or a physical corporate card to your customers? I'm now with a financial technology player, which is funny. It's probably the largest unknown financial player out there, Corpay. We'll do almost $5 billion in sales in 2025. He said, we have this now. Would you be interested in coming back? And Nick, the timing could not have been better for me because, as I mentioned to you, that the brief stint I did in the payroll and HR world, we were just about to exit the business anyway. So I took him up on his offer. Of course, I looked at the technology to make sure what he was selling me wasn't some pipe dream and some lie. And sure enough, here I sit, going into my first year, and the financial technology that this company uses was exactly what we had begged for at my last stop in the corporate payments world.
Awesome. So let's get into this financial technology. You said $5 billion. So you must be doing something right. Absolutely. So, I mean, pretend like I don't know much about virtual payment cards, and our listeners don't know much. So what are they? Like, what is that? So a big piece of Corpay, or what is a virtual payment card?
It is a big piece. It's the fastest growing piece as well. So Corpay is a legacy business, and I should probably say these are my own views and opinions. This is all stemmed from about a little more than a decade doing this. Corpay historically started as a fleet card, so they were issuing cards to large fleets, trucking companies, and anyone that has a large fleet of vehicles, because there was some fraud problems going on in that particular world. There was tracking mechanisms and expense controls that just weren't being handled correctly. So that's kind of where we got our big break many years ago. And if you're bored, you can research all this. And so fast forward to where we are today, and my specific job is to work with small to medium sized businesses to help them not only monetize but control their expense base. And so what you essentially have is if I'm talking to my 5-year-old son, I tell him the same thing. There's basically what I do. There's two elements of a business expense base that I touch. One is the physical cards. Most people call that T&E, or travel and expense. That's where you issue a physical card to an employee or to a C-level executive. They use that card as business expenses. That's what most people in the world know what a physical corporate card is, right? Mm-hmm. Yeah. Where this business has taken off is in the accounts payable category of spend. And you want to be careful. What we were doing at my last stop is we were pushing physical plastic to accounts payable departments, Nick, and coaching them and advising them on how to transact accounts payable spend on a physical piece of plastic. And what I mentioned at the beginning of this call was we were begging for a way to capture all of that potential accounts payable spend on a piece of plastic, which is very difficult to do, and it's very hard to control because then you have just a 16-digit card number flying out there to all your vendors and suppliers that you're transacting with. What Corpay has done, what I really like about the company that where I'm at right now, is they've enabled us to basically, with one fell swoop in accounts payable, pay every single vendor and supplier with a virtual card, not a piece of plastic, but a virtual card that helps them capture all the benefits that you might think of on a traditional card, on a plastic card, which can be some cash flow benefit, fraud mitigation, fraud prevention, expense control, and then also everybody loves to talk about a rebate or an incentive, because that's most people, when they think of a corporate card, they think of an incentive or some type of points program or cash back incentive. So it allows us to do all of that and capture not just a couple vendors that maybe the AP team can handle, but all of the expenses running through accounts payable that can be paid with a card, right? Yeah. So again, to separate the two, Nick, you have physical cards, which is generally geared towards travel and expense, and you have virtual cards now, which are being used to pay key vendors and key suppliers within a business. And it gives you all the benefits that I just talked about there. So it's best, in my opinion, and when I talk to business owners all the time, if you separate the two, that gives you a pretty good idea of what is actually out there and what you could actually capture on some type of a payment tool that isn't the 1659 method that first started over in England hundreds and hundreds of years ago, which is the paper check.
So, okay, you got a physical, you got check from 1659. You got a physical piece of plastic, that's for travel and expenses. And then you got a virtual card. How is that virtual card tied in? Is that tied to a bank account, numerous bank accounts? Is it tied to a credit card? What is that? What is that tied to?
That's a really good question. So the virtual card program is actually set up with typically in our world, some type of a billing cycle. So you have a certain amount of time you generate your card numbers, you generate your virtual card numbers. You have a certain amount of time to transact and a certain amount of time to pay off what you just built up in that certain cycle. So it's not necessarily tied to your bank account, although it can be. And we'll get a little nuanced here. We'll get into the weeds a little bit here in a minute. But essentially, you're just running a cycle of transactions on virtual cards, and then you have a certain amount of time, whatever that is, to pay that balance off in the virtual card lane. Similarly, on the physical card side as well, you have a cycle that you're able to transact, and at the end of that, then you basically pay back just like a standard. Most people have a card in their wallet. If you don't, I'm not sure what year you were born, but most people have a card in their wallet. And they're familiar with that ability to transact on a cycle, and then you have time to pay that back, right? In a business world, in a corporate card world, corporate business world, you typically don't. Most business owners don't let that money ride and get smacked with interest. None of my customers do, right? They've built their cash flow cycles to enable them to transact for a certain amount of time, and then they have the cash to pay all that off at the end.
So it's a float.
That's right.
It's a little bit of a float in the billing cycle.
Correct.
And I'm sure we'll get into some other benefits of using it, but okay. And so there's so much to unpack there. So I'm thinking, and our listeners know that I'm a former franchisee myself, and I did two simple ways. Well, I did three ways. I did ACH, obviously, for my mainline vendors, anybody that accept ACH, just automatic. And then any of the smaller vendors that only like check or cash. And then I try to pay everything I possibly could with a physical plastic card.
Sure.
But now there's this virtual card, and it sounds like and more vendors are accepting these, and
Sure.
It streamlines things, right?
Correct. Yes.
Does it makes it like I've got one simple payment for as much as I possibly can, and it would streamline things.
That's right. Yeah. Yeah. And so your larger customers, your 10 location, 15 location, 100 location, they probably have some type of built out back office infrastructure that they're probably thinking to themselves, and this is an okay thought. Well, I have an office staff that does that for me, right? Mm-hmm. Yes, but there are a lot of franchisees that just don't. Franchisees, restaurant owners, hospitality owners, myself included. I have a hospitality business. That's my side hustle. And I don't have a back office staff. So to the degree that I can, I hate the word automate and AI and machine learning and all that stuff, but it's the world we now live in, Nick. So to the degree that you can basically automate all of that, leverage some type of secure way to pay and facilitate payments to your key vendors and suppliers, why would you not do that? And again, we talked a little bit about the benefits, but the benefits would be cash back. You're getting some type of rebate and incentive. In our world, it's all cash. You're more secure because the virtual card in an accounts payable world, again, to separate the two, we're not talking about miscellaneous expenses and travel and expenses, stuff like that. We're talking about stuff that's running through true accounts payable. You have a secure one-time use, typically exact amount that's being facilitated to the vendor and supplier. So, and again, this is where we're going to start to get into the weeds a little bit, but if you have 50 vendors and you owe all of them a certain amount of money, that virtual card is designated and designed to pay exactly that invoice for exactly that amount with some type of expiration on it, right? In the physical card world, what you said you did in your franchise, Nick, you were throwing your card out there. They could, if it's a $10,000 invoice, they could transact that amount for 15 grand, right? You would hopefully catch that, Nick, when you reconcile. But this is where, and I told you at the beginning, like I begged for this at my last stop. We want exact match, secure virtual card payment in the invoice amount for that particular invoice, right? And so when you have all of that data mapping correctly, you can't transact more than 10 grand on that invoice, Nick. It won't go through. And so there's a myriad of ways to basically set that up for security reasons. We typically do an exact match on the invoice amount.
And then, so let's get into the weeds. So obviously we do accounting, right? We do the transactional based accounting, month to month stuff, and obviously full accounts payable work. So the invoice comes in. How does it work from getting the invoice to the virtual card system to match up that exact payment? And when are payments being applied?
Yep, you're asking me to sales pitch a little bit here, and I'm going to resist that for just a minute. So we have the the process actually typically goes back even further into the payments process. So they call that a procurement to payment operation. So the procure side is typically done through some type of purchase requisition or purchase order, right? I need X amount of napkins or widgets or whatever. That purchase order can all be done within, and again, I'm speaking Corpay specifically, but these views are my own. Corpay has actually the portal or the technology to allow you to initiate purchase order, issue purchase order to vendor and supplier, receive invoice once you've received goods and service, do it what's called a 2 or 3-way match. We're in the weeds here, and that's okay. You do what's called a 2 or 3-way, so you match what you received to what you ordered. That's called a 2 or 3-way match, depending on what type of industry you're in. And then your invoice also comes in, matches your receipt, matches your purchase order, and typically posts to your general ledger. In a perfect world, in an integrated world, it all posts directly to your general ledger, Nick. And then that payment, that invoice is ready for payment. So you would essentially, I'm oversimplifying here, but you would essentially click a button to pay that invoice, which is it's already been received, it's already been matched, it's already been approved in most formats in most situations. And then once you click pay, once you do your check run for the week or your check run for the day, those payments are then spit out to vendors and suppliers. And Corpay, so one of the competitive advantages of Corpay, we actually will do check and ACH and wire payments and virtual card payments. So you have the option of either doing just your virtual card payment, so you've pre-identified within your accounting system, these are our virtual card payable vendors, or you could do your full file. Nick, you could actually submit through Corpay's technology every vendor to be paid, and we'll take on the liability, we'll take on the lion's share of the workload of facilitating payments to vendors and suppliers, tracking down missed payments, checks that are out there. So then that whole, your accounts payable team, which in your world and in the franchisees I work is one person, their job's done. From the time that they submit the file and say pay bills, the onus and the responsibility falls on Corpay then, the company I work for, to basically make sure that payments are handled correctly, that are done, and that your general ledger is updated and payment has been complete. And then on the very end of that is, of course, what you know as reconciliation. Most people know that term. You're reconciling all the payments that have been made or not to your general ledger, to your accounting system.
Right. So that's streamlining it like soup to nuts.
Now, not everybody does that. Like caveat. Right. Some of my customers would say, I can handle my check and ACH payments. In fact, I prefer to do that. That's fine.
Right.
But I really would like to take advantage of your virtual card operation because of all the benefits. Float, fraud mitigation, risk, liability, and oh, by the way, you're going to get money back. You're getting a rebate or an incentive.
You said float. That just kind of leads into my next question about cash flow. So now you can start manipulating your cash flow a little bit better because you're getting a little bit more float than a traditional ACH and a check. You've got some time there to play with, your cash flow.
Yeah, and I'll tell a quick story too. This is a previous experience of mine, but I had a very large McDonald's franchisee that I was working with. We were enabling him to pay his largest invoices, which if you're in McDonald's world, it's either Martin Brower. There's a couple of them, but Martin Brower was the big one. That's who provides the majority of the COGS to a McDonald's franchisee. I think he was doing about $4 million a month with me. He was actually then taking the cash that was sitting in his bank account, Nick, putting it in a high yield savings, some type of high yield money market account, collecting interest on that 30-day, in some instances it was 60 days, but 30-day float. He was collecting high yield interest and then dumping it back into his operating account and paying his bill with us. And so you can imagine when he told me, and oh, by the way, we were giving him rebate and incentive on top of all that. And he was like, look, this totally changed the game for me from a cash flow perspective, because not only was I able to manage cash better, I was generating income on dead cash sitting in my account, and you were giving me incentives and rebates. It almost felt like a double dip to him. And so he was, ecstatic about the program, primarily on the basis of float, but he was also getting a hard dollar value from the program that we had launched with him.
Wow. I mean, so I'd take a drive down, fortunately I live by some lakes and stuff, and I see these just McMansions, right? These big houses. And I'm like, how do they afford these things? I'm like, oh, that guy owns 1 or 2 McDonald's. And it's like, oh, okay. And now he's double dipping and, leveraging technology and leveraging systems out there with the help of you. And look, and then you're getting all the back end security, fraud, streamlining. You're getting money on money.
Correct.
So
Yeah.
I mean, it just sounds too good to be true, right? Like
Well, it's funny you say that because I tell people all the time what I do for a living, and they're like, who the heck says no? Yeah, who the heck says no to what you offer?
Yeah.
And I'm like, honestly, the ones that say no, and I should be careful stereotyping, are the old fuddy-duddies that are like, I've always done it this way.
Yeah.
Yeah, but there's a better way to do it. You know?
So how difficult is it to set up? Like if one of our listeners today said, "Oh my God, like we gotta get more information on this. How do I own 12 Burger Kings, right?
Yep.
I'm doing, say $24 million in sales. My COGS are just say 40% of that. What I could put on spend, whatever. How do I sign up for this? How do I start getting these benefits and streamlining and using this?"
So I will tell you, the full payment process that I was telling you about, where we take all your check and ACH and stuff like that, there is an IT operation that's involved in that because we're mapping fields, right? Like we're mapping within a general ledger account. So that takes a little bit longer. I would say months in that scenario. The virtual card payment, you could be up and running. Let me think about the last one I did in early April. I think we signed March 25th. We had first payment April 28th. So you're talking about, and they're virtual card only. They opted not to do, they're going to handle their check and ACH payments within their internal accounts payable department. You're talking about 33 days, I think, from start to finish there. That one you could kind of call that one a utopia unicorn type operation because their financials were so clean, because there is an underwriting component, right? We're giving unsecured capacity, unsecured credit lines to our customers. So there is an underwriting and a risk component that goes into it. Their financials came through clean. They had all the necessary bank statements to support a very large line of credit to enable them to run a full cycle. But, in a perfect world, you're looking at, 3 weeks, maybe, Nick, set up to depending on how clean and good the financial statements are.
Well, yeah. I mean, listen, you're preaching to the choir here. If they're using GSS, they've got clean and awesome financial statements. So,
Bingo. Yeah.
So especially our clients out there that are interested, and anybody else that's not our clients and said, "Hey, I'd like to sign up for this, but I don't know what my financial statement situation looks like."
Right.
Give us a call.
It's just hard. Like anytime anyone asks me about timelines, it's a bit of a challenge for me to come so strong with a timeline on that because I don't know what your financial situation looks like. There a couple times I've had financial statements that came in from like June of 24, and I'm like, well, we want to feel a little more comfortable giving you an unsecured line of credit. Do you happen to have anything by December of 24? So all that stuff are the variables that can dictate timelines.
Yeah, 100%. I mean, we're in the same boat there. Like, look, we have a typical timeline, like the utopian situation, to get you on board, to get you set up and take over. But listen, if you got inaccurate information, we don't have access to some things and some unanswered questions, it might take us a little longer to get caught up to speed.
Sure. And you brought up a good point. You used the analogy of I think you said Burger King. I always give people this metric, Nick, and this typically helps business owners as you're thinking about what this could potentially mean to a company. I always say a $25 million entity is probably in to your point, 40 to 50% COGS. Well, depending on which industry you're in, 50% to 70% of COGS, and in some instances 80 to 95% of COGS, are virtual card possibilities, meaning they could be paid with a virtual card. So if you run round numbers there, let's just use 10 million because I'm not a mathematician. Well, 5 million of your business is COGS, is cost of goods sold. You're spending money on something. And 50% of that should be put on a card, in my opinion. So that's $2.5 million in that round number. If you say you get 1 to 2% back in cash, which is a pretty standard baseline, you're looking at 25 to 50 grand. And I'll tell you right now, that $10 million, they're operating probably in your world 10% at most net. So you look at what a 25 to 50K bottom line impact would be on a business like that, Nick. It's unbelievable. And again, how do I get there? You just make a change with your payables department. Period. Yeah. We're not talking about, Nick. We're not talking about changing any of your vendors. We're not talking about changing your window cleaner, your carpet. We're not talking about changing your napkin supplier. This is all, in my opinion, even if you're a franchise, this is all stuff you control as a business owner. And you can make that decision tomorrow, 2 weeks, 5 weeks, 5 years to change the way that you pay for things, right? You have the autonomy to do that. Unless your franchisee has dictated that, which I think is against the rules, that's your decision to make.
Right. So what are the roadblocks with your are there any vendors, like in the physical plastic world, they're like, oh, we don't accept American Express. We don't accept MasterCard.
Sure,
are there any vendors that said, hey, we don't do this? You can't.
So it's becoming more and more, and you see this in the restaurant world, where people are starting to surcharge. I'll take your MasterCard, but I'm going to charge you 2%, 2.5%, right? That's the biggest roadblock in our world right now is, are there people surcharging? But I will tell you on the flip side of that, if you think about, let me put myself in the receiving end of that, and I'll give you a horror story. If you think about the receiving end of things, you're paying what, 2%, whatever the interchange rate or the fee to accept the card is. The alternative to that is you're waiting on a check, unless you can force them to ACH. So what is your level of appetite for waiting on a check, or what is your level of appetite for this scenario, which was unfortunate for us, and never receiving the payment because it went to a Russian bank account? So we had a scenario at my last business venture and we accepted card, my last business venture, but there was an intruder into the email system that had a $45,000 payment diverted via wire to a bank account that was in Russia that we never saw the money. So we never got the money. The payee in that scenario was out there. So would you potentially be open to taking a more safer virtual card in that environment? Probably so. So Nick, that's where there's a yin and a yang there. The bad is, of course, yes, of course you're going to pay some type of interchange fee or interchange rate on a card transaction, on a virtual card transaction, but you're going to get your money. And so you think, would you pay 2 to whatever the interchange rate, 2 to 3%, to have the payment securely sent to you via virtual card, or would you rather wait on your check or potentially have it sent to I keep saying Russia, that's probably not politically correct, to an overseas bank account that never makes it to you? So that's where in our industry there is still some good to be had there. And again, when you're talking about the restaurant game, like everybody talks about credit card fees and surcharges and stuff like that. Yes, I get that, but isn't that the cost of doing business in the restaurant world? So I'll digress for there.
Well, I mean, yeah, you're 100% saying that right, because we're out of the check writing business as much as we possibly can. And you mentioned fraud. We've seen fraud. We've seen a lot of it. It's expensive. We got to write it. We got to print it. We got to mail it. And then we're at the mercy of the United States mailing system. Is it getting there? Is it not getting there? And then just the reconciling of it when they get it, when they cash it. And it costs a lot of time and a lot of money. And in the grand scheme of things, it's archaic. And then now they're starting to surcharge. I mean, you're starting to see ACH payments. Banks are charging you, and then vendors are charging you. And everybody's getting their little piece. But in this world, you're getting a kickback on the piece you got to share. And also, you're getting the streamlining, the security, the fraud protection, the et cetera.
Bingo. You bring up good point on the check writing side. Like this was one thing that I kind of poo-pooed early on in my career, where when you're transacting with a card, virtual card or otherwise, you are actually eliminating. And I'll ask you this question. I don't want to put you on the spot here, but what would you guess it cost an accounts payable department per check, if you're writing checks still, to send a check payment to a vendor or supplier? This number blew my mind.
Well, I can tell you what we charge. I can tell you what we charge.
Oh yeah, so you probably do know.
Yeah, I mean, so mass payment systems out there that do physical check writing, they're in the ballpark of $179 to $379 per check.
Nailed it.
Per check, and we're at $375.
There you go. So you have that, and then if you bake in, which this is always a funny number and it's a hard one to catch, if you bake in the inefficiencies within accounts payable departments, that is tracking down invoices, confirming invoices, approving, you're in the $5 to $15 per check range, Nick. Yeah, that's 5 to 15 per check, because you got check stock, you got window envelopes, and you have stamps. You have U.S. Post. Mm-hmm. So when you can eliminate, and look, I have customers that have eliminated thousands per week.
Right.
Thousands per week. So if you can eliminate, let's use the small number. Let's use $5 per check. If you can eliminate $5,000 a week in some of those instances, just by shifting payments from a outdated, again, 1659 method of payment to a 21st century payment method, you may say, I don't even care if you give me a rebate. I don't care if you give me any cash back on this card. You just saved me $5 a payment, right?
Right.
So yeah, that's a good point.
Wow. I mean, I'm blown away by it all. I mean, in our space, look, we see intimate financial data from franchisees that own one location to franchisees, mega groups, PE backed, whatever it is, that own 700 locations. And it's just starting to break the iceberg of virtual payments. It's just starting to. Like, automated payment solutions just started a few years ago with, hey, we'll do your check for you at this fee. We'll do the ACH. We'll do this. Oh, yeah, there's also this option out there if you want to do it. But it seems to be lagging in the hospitality restaurant multi-unit space.
Yeah, I would agree with that. Well, it's not terribly surprising if you think about like some of the game-changing moments in the restaurant industry, and particularly in the hospitality industry. Obviously, COVID being the most recent one. You didn't really see handhelds at tables for ordering, right? Until somebody created a handheld. So some of those things, it kind of makes sense. And furthermore, in the industry that I work in virtual cards were not a thing until like the late really like 2010 is when you started to see mass virtual card payments within accounts payable departments start to take off. And then you started to see all this financial technology being created from the ground up, because the legacy providers, the ones you've already talked about, banks, crusty old systems, you can't do it. And so the best of the best are ones, and again, I'll maybe shameless plug for Corpay, the best of are the ones that have burst onto the scene in the last 10 to 15 years, because they're not operating off legacy banking systems, because those legacy banking systems can't account for virtual card technology the way that the innovators have. And there's some formidable competitors out there to Corpay as well that I look at and I go, dang, you have a nice system. Now, Corpay's system, too, for what it's worth, is at par with those, but it's like some of those ones that have been created since 2010, you have some 2015, 2000. That's only 10 years ago, Nick. Those are the ones that are taking market share right now from the big boys. And it's not terribly surprising to hear you say, like, really, we're lagging here. Well, that's somewhat typical, if you ask me, of the restaurant and particularly in the hospitality world, where there's typically a force to change. And the example I always use, like when I was at my previous company before the payroll gig in the corporate card world, you didn't see a lot of true AP or large business expenses running through AP hitting a card, virtual card or otherwise, until 9/11. That's kind of the teetering time of when, because the legacy players had to get innovative, because all the travel and expense and all the miscellaneous physical card spend deteriorated because nobody was traveling, Nick. And guess how they're scored from Wall Street? They're all publicly traded. They're scored on transaction volume. Right. So if we're not transacting and nobody's traveling, how else can we get money on a card? Well, you got a bill to pay in your accounts payable department. Can you put that on a card? And that was kind of the telltale moment in this industry that I work in for how do we generate revenue if you're a big publicly traded credit facility. How do you generate revenue when nobody's spending, nobody's traveling, nobody's going out to restaurants in the COVID world? Well, find somewhere to spend that money, and that is in accounts payable.
Right. Well, so that pivot and that innovative thinking is a benefit to the people we're talking to today. So
no doubt.
That's great,
No
man.
doubt. Yeah.
So let me ask you this last question, Andrew. So, I mean, you said a lot, and thank you so much. I've learned a lot. I'm thinking, obviously our current clients, who could benefit from this? Are they using it? Are they not? It's going to be something I'll be talking about, especially when they're starting to leverage their G&A and, all that good stuff. Where do you see this industry, your specific industry, in the next few years? Like, say, give me a 3-5 year plan.
Yeah,
Where do you see it?
You can't, I don't know about you, but I can't escape anywhere on any social networks, business forums, all the major head talkers, if you will, are all talking about AI, artificial intelligence. And that's no doubt like the sexy theme of the day. And so we're not isolated from that. So you have what's going on in our world right now is artificial intelligence, machine learning on transaction data, the optical character recognition OCR technology has been around a little while now. But what OCR, optical character recognition, does is it basically reads invoices and reads transaction information and codes it accordingly. And so that's our next phase. If you ask me, my personal opinion, that's the next phase of this industry, is that there will be a time, not anytime soon, where you basically don't touch an invoice. You don't see an invoice, you just approve payment. And that's where you'll see, again, I think in the back office, if you will, of your industry, Nick, that's where you'll see a lot of disruption. And AI is disruptive in and of itself, but that's where we'll see, and I think our industry is headed. Now, I was asking some of the brains in our business, will there ever be a time where you just don't pay anything? It just automatically gets paid? Well, no, because you still need, and this is what we were talking about before we got on, Nick, you still need humans, you still need experts, and primarily business owners still want visibility and control into what's being paid and what's not. So I'm not sure how far we are from that. I don't know that I'll be alive, quite honestly, for that phase of this work. But that's where there will be a day in the not so distant future, Nick, where invoices aren't touched. They're just approved.
Yeah. I mean, that's happening at some level now. I mean, they just get emailed, and then, AI takes over, and it gets mapped, and then it gets ready for payment, and then you get sent, your what you need to pay. I don't want to get into the verb there, the word there, but hey, what do you got to pay? Your aging report, and then you got to go click and pay it. But you can put that on auto drive if you want. Just run the business, and then give me a report at the end of the month. But like you said, humans are still needed to at least set it up and monitor it, and 100% monitor it. We want the controls to at least some extent, but we can leverage that technology for sure.
Yeah. There may be a time, like I think about this from my own perspective too. Like, again, in my little side hustle hospitality business, like I probably don't care about like a $12.96 trash bill, right? Like let's just set that on the auto pay. But anything above whatever the threshold, 150, 1,500, $5,000, that's where you may see the technology taking over and just pushing payments out on some of the smaller stuff. And now you're only worried about the stuff that's going to ultimately impact the profit and loss statement at the end of the month.
Well, this has been fantastic. I mean, like I said, I learned a ton. I mean, we talked about, it's pretty simple to implement. It's something that's very not as prominent in the hospitality space as it should be in the virtual caller world. But it seems pretty simple, and it's easy to grasp and understand. I took away 3 benefits from it: security, fraud prevention, and kickback, right?
Yep.
And then obviously streamlining some things, making, less work. So in the long scheme of things, we're going to save a bunch of money, and we're going to make it more safe and more secure and protect us.
Bingo. Nailed it.
Pretty simple. I mean, I mean, you gotta be crushing it. I mean, it's like you can just make one phone call, be like, "What are you doing? Like, what are you like? You gotta here. I'll send you a link. Sign up today. We'll get you rolling in 30 days." And but I know it's not that easy. But
well, it sometimes is. I mean, some of the trigger events, when you think about, again, what I do for a living, particularly in the accounts payable department, I just got a call the other day. Hey, my accounts payable lady, after 36 years, told me she's done. In July. Can I just use your kind of outsourced accounts payable service, if you will? Like where because I don't want to replace her. I don't need to if I have you. So those type of trigger events, to your point, Nick, on a one call. Now that was not one call, but those type of trigger events are also very helpful for us. And it's helpful for the customer too. That's a publicly traded business as well that's watching margins very tightly. And it's going to be a huge lift for them to hire a new accounts payable person, teach them the ways, because Susie or Sally that's been there, she's got her own method of the madness. Well, we can, sadly or not, we can replace that madness with technology.
Right. Yeah, we're feeling that for sure.
Yeah.
Well, cool, man. Yeah, I mean, how can people how can they get in touch with you or touch with your company?
Yeah, so I'm on LinkedIn. I do a fair amount of like my professional stuff. I'm on other social media channels too, but LinkedIn, Andrew Grunder, you'll find me. I got the Corpay ticker symbol on my profile, cool. And then it sounds like a risk, but I always put my cell phone number out there too, because I think that's the best. At least for me, that's the best, quickest way to communicate is cell phone number, which is I can just throw it out here, and it's think it's on my LinkedIn profile. If it's not, I need to put it on there. 614-477-8410. Text me, hey man, heard your podcast on GSS, Nick Stauff. Can we talk? Absolutely. You know, and
Cool.
one of the things I should say that I didn't is I'm a big advocate for people adopting this strategy, whether you do it with Corpay or not. So if your best friend works for a competitor or for a bank, please don't think that this is the only option out there. I know it's not, but I'd love to talk through that kind of stuff with you, because there are some watch outs when it comes into reviewing the vendors and suppliers that you're working with, Nick. There's some nuances to that, and some people would say, yeah, they'll take your MasterCard or your Visa or your American Express. Well, maybe not. And so Corpay has good visibility and insight into direct vendors that we work with, suppliers that we work with, that we know will take a Corpay virtual card. So
Yeah. So you're providing even more value. Well, great, man.
would love to.
Well, thank you again, Andrew. I really, like I said, I really appreciate your time. This has been awesome. I hope our listeners learned something. I for sure did. And, you know, we talked a lot about technology and maybe where it's going to be going in the future. So I hope our guests tune in for our next episode. That's going to be about how the fast changing restaurant technology space is affecting the hospitality in the industry that we're living in today. And we're going to be having some great guests on from some extremely big fi-tech companies and all that good stuff, or fintech companies, you say. But yeah, have a good day, Andrew. It's been awesome.
You too. Thanks for having me on, Nick. I appreciate you.
You
buddy.
got it.
Thank you for tuning in to The Financial Advantage with GSS, the video series for restaurant CFOs and financial professionals striving for operational excellence and strategic success. If you found this episode insightful, don't forget to subscribe to The Financial Advantage with GSS on your preferred platform, or visit gsslp.com for additional resources. We'll see you next time.